All right, what's going on, fam? We are going to go over some concepts where we're going to look at higher time frame meshing into lower time frame and what that means. And so we're going to give a few examples of different parts of the PD array matrix. We're going to take a look at this area back from end of 2022 going into 2023. And we're going to start at the highest part of the PD array matrix, which is going to be a rejection block. And we're looking at NQ. This is the weekly chart. And here we have a rejection block. And so we're looking at how we can take this setup and find setups on the lower time frames and mesh what's going on here on a weekly chart into the lower time frames so that we have the correct bias and the correct rationale for why we're taking positions and which direction it's heading. So just to take a look at a couple things here. Um, on the monthly chart, this whole area was a change in the state of delivery to where you have a consolidation pattern, pretty wide consolidation on the weekly. On the monthly, we can look at that real quick. And you have a very block-like structure. Okay, if you go ahead and backtest these candle patterns, this kind of candle pattern of the candle bodies is a change in the state of delivery. And it's where price has met its terminus, and now we're just covering up and down these candle bodies, building positions for the new state of delivery, which as we look at this monthly chart, price was being delivered lower. We have our change in the state of delivery, and then price begins to deliver higher, which we can see the subsequent action out of this change in the state of delivery. And that was after some relative equal lows were taken out. Okay. So we'll go back to the weekly chart. We had that highlighted from the monthly, so we'll just take this and we'll scale it down. And we're just going to look at a couple things real quick. So since we had taken out previous lows, and we can view that on the weekly chart, looking back here, we have these lows taken out and these lows taken out into this order block. And so now we have price starting to form the discount side of the PD array matrix. And what that is this. I will show you. Hold on. So here is the premium and discount array matrix. And what we have is the order in which we can find these. And so when we took a look at the monthly chart, we were in monthly discount. It was below equilibrium. We took out an old low and we formed a rejection block. So we're going to look at this series of arrays that start forming bullish arrays as it puts these in. And so we'll use our higher time frames to look at where we would take entries on the lower time frames. Okay, so we'll go back and we'll look at the chart right now. Okay, so back to the weekly chart. So a few things we have right here after we took out the old lows is we have a rejection block placed right here. And what I like to see that really determines that this is a rejection block is we have a candle body with a wick. This is formed, and then the very next candle, I want to see candle body get into the wick and reject out of there. So the fact that we gap down and then drove up is showing that price moved into this rejection block and then drove up. Again, we have price coming back down into the rejection block, and then subsequently, it actually forms another rejection block. And so when we look at this, we have price create a wick, went into a previous rejection block. We have a candle body where it gapped down again. Okay, this is a new week opening gap. You can see the difference in candle bodies. And then price really drives out of that rejection block. Price comes up, comes back into a bearish order block, okay, which we have right here. Up close candle. Price closes below this. Price comes back up into it and then drives lower. That's a bearish order block. So what does price do? Comes back up into it, drives lower. But since we're having a change in the state of delivery, we come back down into the rejection block, which is a bullish PD array, and we see price drive. And now we're looking at a break of structure in the weekly. Okay, so we broke the swing high, and now we didn't come back down and go lower, but now we're creating a higher low. All right, so we'll look at this area, and this is going to be December of 2022 into January 2023. So if we have this marked out on the weekly, then we can start taking a look at when price comes back down into this area, we're going to be looking for bullish setups. So we'll move on to the daily. All right, so here we have the daily chart of NQ. This was the area we highlighted, which was a weekly rejection block. And if you look at the daily, we actually get a daily rejection block that's confluenced in the same area with the weekly rejection block. So because that overlaps, this is a great thing to highlight as well. So now we have multiple setups where we can take bullish setups. Okay. So we get this low, price runs all the way back up, gaps way down. Or I'm sorry, price drives down, comes all the way back up, drives up, comes back down, and then we have the gap down. Okay, but we have this wick, and then we have candle bodies that are rejecting out of this wick, which is indicative of a rejection block being placed. And we can see every time price drives into this area, it drives out, touches again, and really drives away. Comes in, drives out, kind of gathering orders in here, a little area of consolidation, and then really drives away. Okay. And then we have old highs starting to show support. Okay, so what once was a daily order block, price came in, hit this and rejected multiple times. Now price drives through this, and now it starts showing support for higher price delivery. So let's start looking in this area right here. So we're going to go to, let's start with, we're going to come over here, and we're going to go into the beginning of the year. So that's January 5th. And we'll take a look at this area on a lower time frame. So all we need to do that is we have this. So that shows our rejection block. We can come over here and we can just kind of highlight this whole area. So we have a time period to work with. And then we'll just give this another color. So we'll go blue. And this is going to cover Friday, December 23rd, all the way to Friday, January 6th. So we'll take a closer look at that area on the lower time frame. All right, so here we have this area, Friday the 23rd to January 6th, and this is the 1 hour chart. Here we have our rejection block that we know a weekly rejection block is sitting right here and also a daily rejection block. So we're looking for bullish PD arrays to form anytime price dips down into this area. So if we take our first action right here, what I'd like to highlight is prior to the run into this rejection block area, we have multiple equal highs that are set. Okay, so this is our buy side liquidity target. We can start looking, and what you have in the overnight session is you have New York open. Okay, New York open. We run some liquidity, we create equal highs, we drive down into the rejection block, price comes back up, we balance right here, and then we come right and balance right with this. Okay, and this is a mitigation block. So that kind of runs right into this mitigation block. And then price finishes off into the afternoon with a PM session dump taking out this low. And then we get into the consolidation and basically this 8 a.m. going into New York open again right in here. So as London's finishing up, it ramps up from London finishing up to New York. Okay, so one thing I want you to notice is we're coming out of a rejection block, so we want to look for bullish PD arrays. Okay, so what we have here is we have two down candles, 1 hour candles, and then this next candle drives up really, really fast and creates some good, that's a big candle, creates some good distance out of these displacement away from these order blocks. Okay, when we see this kind of price action, what I'm expecting is I'm expecting price to drive down into this order block on the next candle and drive up towards the next closest liquidity spot. Okay, so we already ran this with this first candle. So we're just going to draw a line right here. Okay, let's see our visibility. Cool. Okay, so now we're going to highlight this area. We have that line there. And we're going to look at a lower time frame. So now that we have something set up on the hourly, say we haven't got to New York open yet, and you're looking at the market, these three series of candles should give you a clue that price is going to come back down into this order block and drive up. And this would be our buy side liquidity target. And if we're just going based on the hourly, we have one contract. Okay, because there's small candle bodies, typically I expect the wick to be used, and so I would place a stop loss just below the CE of that area of those order blocks. Okay, so we're looking at $375, and we're targeting the highs. Okay, and so with one contract, we're risking 375 to make a little over 2,600. So that's what we're looking at for one contract on NQ. just to give you an idea of why it's important to take these setups because they're gonna pay when your higher time frame is telling you to go in the right direction. Okay, so now we'll look at this area on a lower time frame. All right, so now we're checking out this area that we highlighted and we're looking at the 15-minute chart. Okay, so we created this box to highlight it. We can get rid of that. So now we're looking at that hourly time frame. Okay, so we got 6 o'clock to 9 o'clock right here. 9:15, New York Open. All right. What this wick does is it balances this BISI. So we have a buy side imbalance, sell side inefficiency. Okay. We know that price is going to be bullish out of this rejection block. So we should start seeing bullish PD arrays form. So again, little things that are clues to this are when we have candle bodies that are held within a wick. The wicks can still do the damage. Okay, this will happen. And it's only because it's probably running these basically equal lows. So it's just another run on some liquidity. But if the candle bodies are always going to tell you the story. So we have a small rejection block in here on the 15-minute. We can highlight and you can see price comes into there and then boom, rockets out of that area. Okay, we have a down close candle and then price really ramps up. Okay, just going to expand this a little bit. So again, it's the same concept with order blocks. This one really has no wick, okay? But we're going to take a look at the values of this candle right here and this candle right here. So there's a couple different entries you could use. So you have a, a low, okay, swing low. So swing high, swing low, higher swing high. We get a lower swing low, okay? And then price runs away. Fair value gap, breaker. So you could take an entry right here, and we're going to look at some values on that to give different options. So anywhere within this is going to be your bullish breaker, paired up with a fair value gap, and that can give you an entry. So let's just look at what kind of drawdown we would take by taking that. Okay, so if we bought one contract, our drawdown would have been $140. Okay, so that's how much drawdown you would have incurred before price ran away. Where would you set your stop? Well, we have a couple options right here. So we have an order block right here, and then we have this breaker. All right, so if we go just below mean threshold of this order block, that's pretty much at the bottom of this breaker. So we can go right there, and you're looking at $300 risk for, here's our equal highs for the $2,600. All right, so let's study price action a little further. So that's one entry. Now let's go to the next entry. Okay, when we see price coming out of an area that we know is an area where bullish PD arrays are going to set up, this highlighted red area is a rejection block. We just had a rejection block form on a lower time frame, and then we had an order block form. And price really ran away when that order block was created. So what do we want to see? We want to see price come back down into this order block and then really take off. So if we look at Okay, right up here on the screen is going to give the values of the candle. Okay, so if we look at this candle, the high of the candle is 108.56.75. And if we look at our wicked candle, up close candle, the low is 108.56.50. So 0.25 overlap. And so if you put your order, and I'm going to expand this just to see that the order would have been taken. If you would have put your order on top of this, as a 15-minute chart on top of the order block, you would have came down, tapped it, and you would have had basically zero drawdown because it probably would have happened so fast. So again, this is the importance of meshing what the higher time frame is telling you, because then when you start looking for setups that are going in the correct direction of the higher time frame, they're going to work out in your favor really well, and you're going to get very minimal drawdown. And then you can see price really drove up, and 15, 30, 45, 1 hour, so 9:30 to 10:30, basically the opening range, targets are met. Okay, and you'd be done for the day in 2 hours, no drawdown, 2,600 bucks in your pocket. All right, so we'll go ahead and we'll take a look at another example on the higher time frame. This was using the rejection block in the PD array matrix. Now we'll take a look at using an order block in the PD array matrix on a higher time frame and how to transition that into a lower time frame entry. All right, here we are, and we're back to our weekly chart. We already highlighted this area on the monthly as a change in the state of delivery. Okay, we've highlighted that there's multiple rejection blocks on the weekly. We highlighted taking plays off of those right in here. Okay, what we have here is a series of down close candles into the rejection block, and then a series of up close candles that displace these down close candles. So what we can take here is we can draw a line. Okay, on the higher time frames, I like to use the candle bodies, and on the lower time frames, you'll see that the wicks are used very frequently for entries, but candle bodies are used quite a bit on the higher time frames for entries. So here we have an order block. Okay, we've already taken out previous lows, we've formed a rejection block, and now we've formed an order block on the monthly, and we're showing this on the weekly. So down close candles, series of up close candles that displace greatly above this. Okay, so you're looking at 12,000 and almost 1,000 points that it displaces above here. So that's a good size displacement on the weekly. Okay, so what do we expect? Here's your order block theory. When price displaces away from an order block, we want to see price come back down into the order block. We want to see it grab orders, and then we want to see it move away. Okay, so subsequent price action off of this series of candles, price displaces away, comes back down. We have a building of positions long. Okay, you can see that every time price comes down into this order block, and we're going to just get this nice and tight just to demonstrate. Okay, so we have our order block. Okay, wicks do the damage. We got a candle body that matches that, comes down into it, but all these movements into it are building long positions. Okay, so we're going to highlight this area, and we're going to look how every time price comes in here, we're looking for long setups. Okay, so we got our line. Let's make sure the visibility's on. Minutes, perfect. Let's go ahead and highlight this area. Okay. And now we'll take a look on the daily. All right. Okay, so this is our marked out from the weekly. So we have our daily price action. So we are looking at any time price comes below this red line, we're looking for long setups. And you can see how price is kind of building. This is in a consolidation pattern before it starts taking off. Okay, so we're going to look at, this is going to be, we're going to look at a couple areas. We'll look at in here, and then we'll look at in here as well. Okay, and we do have, like we showed on the daily, the rejection block that was back here that we highlighted. Okay, we start seeing these this bullish order flow start to progress. Okay, so it's on the daily. So we have fair value gaps that are being ran into, the price runs away. We have order blocks being created. What happens? We put a line on this candle body, two down close candles, price really runs and displaces away from it. We want to see price return. Look at that's a great entry right there. Price just returns into the candle body and proceeds to move away. Same thing, order block, price moves away, price comes back down into it, runs out sell side liquidity, and then boom, makes an even bigger move the next 3 days. And where does it go to? It goes to a previous unused order block to where it gathers positions. And then we'll just take a fib. Okay. So we have a fib right here. And if you look at where price goes, okay, price goes into this weekly order block into an area of optimal trade entry on the daily. And the reason why I'm using the swing low is because, and we can use this one, I'll show you. Okay. So you either get an optimal trade entry, or if you want to take this price leg that moves swiftly up, okay, out of the weekly order block, we have an area of premium and discount. And so this is equilibrium. What does price do? It just goes into discount, and look how it reacts every time it goes into discount based off of this displacement leg. It moves quickly away. All these candles, you have two daily candles that boom, move quickly away once it gets in the discount. Okay, so this is another part of the concept of knowing where price is at on the higher time frame. So when you're looking for your setups, you know that price is going to move in your direction, so you're looking for bullish setups. Okay, so what we can do is, now that we've highlighted this, that's just another piece of the pie that you add when you're looking at an area. So I'll take this, I'll highlight that, and you can just label it EQ. So that's equilibrium. Okay, so we'll get rid of this. So now we know that anything below this is discount. Okay, so if we haven't made it to these candles yet, we're somewhere in here. Okay, now we're looking for price to get into that discounted area. So we're waiting, waiting, waiting. And look what price does before it goes into the discount. It gives you clues that it's going to go lower. Equal lows, weekly order block. Okay, so let's go look at this area on a lower time frame. And we have an area of February 24th all the way to March 13th. All right, so here we have that same area, and this is the hourly chart. Okay, so we have our area of the weekly order block. We'll change that to blue so we can differentiate the EQ line. But this is our equilibrium. So anything below here is discount. Okay, so what we see here is we have an area of discount. Okay, so price is going to want to return to an area of premium. A few things that we can take notice is look at how price wicks up and the candle bodies all stay after moving into discount. And then we have a candle body that drives down but doesn't break this low. Okay, so what does that tell me? That tells me that when price goes into this discount, it's starting to change how it's going to be delivered. And the PD arrays that are going to be delivered are going to be bullish PD arrays that are going to give me a ton of setups to go long. So what I have right here is a rejection block. We have candle bodies that come down into this rejection block and move away. Okay, we have a down close candle, and we have a candle close above it, and then a second one that closes above it. So after the second one closes above it, this is two candles that really displace above this one. On the hourly, we're looking at this order block being formed. Okay, so we have see we got Asia that kind of starts to come down. We have kind of a big movement in Asia right here, and then kind of just continues downward. Consolidation through London. Okay, we have the move down into the rejection block. 8 o'clock, which encompasses this 8 o'clock candle and this 9 o'clock candle. So this encompasses your 8:30 news, your 8:20 CME open, and now we're looking at okay 10 o'clock. So right here is your New York open. What do we get? We get the consolidation after this expansion. Okay, so we get expansion down. Where it expand from? This order block. Up close candle, price displaces away. It's going to return back into it. And what does it do? It gives you a nice entry. And that is London. Had a great entry. And then expands down. Okay, so then we have this change in the state of delivery in discount in a weekly order block where we're going to see price move back out. So we have this order block right here, then we have another order block right here. Okay, candle body. This candle body closes above. Okay, this next candle returns back into the order block and then drives away. So we're going to take a look at this area on the lower time frame. And you got a nice PM expansion because you had AM consolidation. So let's take a look at this area on the 15-minute time frame. All right, so now we have this area on the 15-minute time frame. Okay, we have the rejection block that's highlighted. You can see that. Okay, on the 15-minute, we have another rejection block. Okay, that's put in right here. Price comes down into that area. Notice that it creates equal lows. Okay, and then price doesn't return to take those out right here. All right, so we got a rejection block. We have an order block. And this was our hourly order block. So when we look at that, look how this hourly order block price goes up and out and then boom, comes back in. Okay, so as you're looking at this and this drives above this down movement here, so right around lunchtime, these are all your potential entries. All right. Okay, now on the 15-minute chart, we have these down close candles, and there's a couple different ones you could use. Okay, So we're going to really zoom in on these candles. I'm going to give you a couple secrets that I like to use. So we already know that this is a rejection block that we highlighted. Okay, we're taking out lows already. That rejection block was formed. Okay, so let's look at a few of these candles right here. See this candle? It gaps down and then runs down and then moves up. Where you have this candle body that's in here, this is a rejection block. All right. Then you have another swing low that's put in. So you have these swing lows on the 15-minute. If you go to a smaller time frame, those will be swing lows. And then another swing low. Okay. This runs out in this rejection block. And then what happens? You have another rejection block within the rejection block. Okay, so now we're looking at anytime price, because we have multiple stacked on top of each other, we're looking at lows already taken out by this rejection block that's formed. So then I would expect order blocks to form. Now, let's take a look at this side of the price action. Rejection block formed. Okay. A lot of times rejection blocks and order blocks are paired up together. So down close candle, price runs above it. I would expect that the next candle would go back down into here and then move away. And what do we have? We have price dip down into this candle and move away. And what does it go to? Takes out this high. That's a 15-minute chart. So we have a swing high on a 1 or 5-minute chart. And it goes into a 15-minute order block. And this is a temporary order block that's holding price down. And what does it do? It returns back into the rejection block. Okay. Down close candle. We have another candle that drives quickly above it. What do we expect price to do? Return back into the order block before moving away. Here's an entry. This is your 15-minute chart. Now this is nice setups for people that are trading London. Okay, we haven't got to New York yet, but if you're trading London, these are moves that you could take. So let's see here. It's going to let us, no, because I got too much stuff drawn on here. Put it down here, it will. There we go. Okay, so we move it to right here. And I'm just giving one order. So I'm going to place my stop loss at the mean threshold. Okay, $255 risk. And we're going to put it at the first swing high. So this is on a lower time frame, that's a swing high. Okay, and price just goes above it and you get a nice return. Okay, you have equal highs placed right here. Here's another order block. We're going to place, as soon as price drives above this, we're going to place an order right on top of here. And we're going to place our stop loss just below mean threshold. Okay, 150, 130, we're risking. And if we just take our first set of equal highs, okay, you get price returns into there, drives up, and it even takes out this high over here. Okay, so if you're running multiples, you can scale. But if you just took the first set of equal highs, $575. Okay, and this is just using price action and reading the candles, knowing that price is going to give you bullish setups. So we get a few swing highs taken out. This one is not. Okay, but it creates some relative equal highs. So we have price come back down. A rejection block is formed. Okay, we have this down close candle, and then we have a series of up close candles. Now this one you get a lot of wick action, and if you're putting it below mean threshold, just below, you get stopped out on that one. So let's take a look at um, what the loss would be on that one. Because if we're going to do something, we're going to do it the same way every time. Okay, so if these two I did just below mean threshold. Okay, so we made 900, about 900 bucks on those two moves. Okay, this one right here. So it's $115 loss, very minimal loss. Just stopped out. And if you wanted to, you could probably get back in. Okay. Here's another thing though. So we have price drive back up. We have a series of down close candles. So if we looked on like a 30-minute, this would be a 30-minute order block. Okay, so because we have so many candles that drive up, I'd like to see price come back down into this order block. So if we move that right up there, and we go mean threshold just below, which is right there. Okay, we're risking 210. Okay, and so now we've already taken out these highs. All right, all this is taking out these highs. Okay, we just get a wick up here, and so now it's like pretending to hold this order block right here. Where's our next highs? Okay, well, we got a set of equal highs right here. So, and we need to rebalance this. So then we place it up here. And now we've just got an entry where we risked $210, and now we've made $2,400 on one contract. Okay, for a PM expansion after all this consolidation um, in Asia, in London, and New York AM. So we are kind of expecting to have some sort of expansion coming out of these rejection blocks and out of the weekly order. I'm sorry, out of the weekly order block. Okay, this is our weekly order block. And what do we see? Price really expands up and out. Okay. So then as we get into the next day, okay, Thursday, boom, boom, boom. Now we're getting into London. Okay, and here we get into New York again. And what do we have after this PM expansion? Okay, we got a bunch of liquidity just sitting right here buy side. Okay, some equal highs right here, basically. All this straight across equal highs. Okay, and now we're looking at 930. Okay, same thing is set up again. Another kind of consolidates down, starts to expand up. We got a manipulation leg. Price really drives away from these down close candles. So now I'm looking to take an entry right here. We'll just move all this up. Okay. I'm going to put this just below mean threshold. So then we come back over here and we're looking at all our equal highs right here. So I'm going to put it right here. And so I'm going to target that as our liquidity. And the next day with one contract, you have a play for $1,400. Okay, all because we viewed the higher time frame and we're constantly looking for bullish setups. There's a few in here for people trading the London. Okay, but I just wanted to give you an idea of coming back in the New York Open the very next day and how come we're not hunting anything short. Okay, because we're looking for bullish setups coming out of this weekly order block. We're going to have multiple days of price running up. until it reaches a higher time frame point of interest that it wants to move down. All right. So then when we go back to the daily, okay, and we're looking at this, well, what did we catch on Friday? We caught a high in here, okay, somewhere in here, and we caught it to this high. Price returns all the way back up here into this fair value gap, and then it comes back down into the weekly order block. It's that blue line, okay, back down to the weekly order block. And then here we have your discount area again. So then we can take a look at Monday, Friday going into Monday into the new week and looking at what that is on the 15-minute chart again. So that would be Friday, March 10th. So we'll go down here to our calendar, and this is all back testing. This is how you start to learn how price repeats itself over and over, and how if you use these same concepts from meshing your higher time frame into your lower time frame, you can really find some great setups with very little drawdown. Look at so far all the things we checked. We took one loss for $115, and we've probably made about 5 grand using one contract over 2 days. All right. Look at this. See how this wick comes all the way down here into the discount? And then what happens? Candle bodies get brought into this area. It's a rejection block. It's showing this on the 15-minute, and it's showing the start of a new PD array that's going to be running bullish setups. Okay, so this is kind of a interesting where we get um, the New York Open, and then it really doesn't give us a order block or a fair value gap setup. We get some big movement, and so really we could start to look at this on a lower time frame. This isn't letting me check things out on the 5 minute. That's why I've been using the 15. But you could really dig into here on the 5 and 1 minute, and I'm sure you could find a setup in here that would give you a position right here. But on the 15, we're not seeing it. Okay. So then we have to, if you're looking at the 15, we'd have to start hunting other things. But I mean, you have your obvious points of liquidity. Okay, so that's Monday, and so now we've dug into discount, into the weekly order block. Price is coming out. We're not expecting it to return to here. We already had price return up and take liquidity, then come back down into discount. This is the second time it's come deep into discount, into a weekly order block. So we're looking for bullish setups. A 15-minute looks like there's a lot of just, I don't know if this was a news day that happened, but we have a lot of wicking action, and nothing's looking super clean on the 15-minute. Again, I think there'd be stuff on the 5 and 1 minute that you could probably get into these areas. If we continue forward into Tuesday, must have been a news driver because we have an 8:30 huge wick that runs all this buy side out. I'm sorry, sell side. Okay, and then what do we have as far as that? Well, after this 15-minute candle, 8:45 London, we have a candle body that breaks above here. Okay, so then I'm really looking for price to return back down into here. Okay, and we have this right here. So after all this mess, after it runs out, of course it's going to run out sell side, okay, because it's looking to go up. You have this nice candle at 8:45 that comes into the order block, and then price just takes off. Okay, so if you got in right there and you were targeting these highs, let's look at our, okay, so put it right on top of there. Okay, we're gonna go just below mean threshold. We're safe. Take profit's gonna be right up here. Okay, 1380. If we're running multiple cons, we have right here. Okay, 1900, and then we have a previous high up here. Okay, and that's 4 grand off of one contract. Okay, but you could run multiples and scale out at these areas. I would probably, because these are all relatively equal, like pricing is gonna, if it pops above here, it's gonna take out this one, so it might as well pop hard and take out all three, in my opinion, which it does. So if you look at that candle, 15-minute candle, what does it do? Manipulates down and then drives through all that, taking out the liquidity. Then we have a reaction out there with another down close candle. Candle body closes above that candle body, price returns back down and then starts to make its final run on this liquidity up here. So this is just a return because we had such a move back up. Again, I'm going to urge you guys to use your fib tools. Let's see. This is where it starts its major move up. Okay, so when you have multiple swing lows, depending on what you're looking for, um, but how this swing low starts a huge move up, that would be a swing low that I'd like to take to measure where price is going to return. If you see it taps into discount, okay, and then never gets back there, and then just takes off. Okay, if you're looking for like, oh, I want to see optimal trade entry, you know, here's a swing low where price has really moved away from, created a swing high temporarily, okay, and then candle bodies get into optimal trade entry. All right, you have a 79% tap into there. So depending on how you want to view price, if you like the optimal trade entry, you can use the nearest swing low to the nearest swing high. That creates a huge price leg. But we're looking at areas of premium discount, and we're using all these PD arrays to help get us into positions where price is going to move in our direction the way we want it to. All right, and we'll just cap this off by going back to the weekly chart. We took a look at how we could take plays out of a rejection block. We took a look at how we could take plays out of a weekly order block. And the key to this is that we're seeing candle bodies hold the order block. Wicks are doing the damage, and then we finally get the move out of the weekly order block and we get 3 weeks of nice expansion, okay, where we take out this high, consolidate in a previous weekly order block, okay? This order block was used to drive price down, and now we get consolidation and price expands up. Again, even candle body closes above it. I'm going to use the top of this because it's such a small candle body. I'd use the wick. The next candle comes back down into it and then drives away. Okay, so we can highlight that same area and look at, okay, order block placed this week. I don't necessarily need to hunt this week. This week, I'm looking for all bullish setups because I want to see price really move away from here, okay, which it does. So just to give you an idea of how to hunt these setups and where you would place your lines, we're just using all the simple concepts of the PD array matrix that's in core content, but it's now digestible and you're seeing it from the higher time frame broken down into the lower time frame, where you would place your orders, where you would place your stops, what targets you would reach for. We showed a play that if we did the exact same thing over this whole time, we would have taken a loss. The loss was very minimal. Okay, so this is good. These concepts are going to translate into consistent trading over and over again. So thank you everybody for listening. If you found this helpful, let me know. If you want to see more of it, let me know. I'm happy to continue to go over price action and how to read candles and the transition from higher time frame into lower time frame. All right, everyone have a great time and safe trading.